Vivek and Manish were childhood friends. They grew up together in a small town. They shared a common dream: achieving financial freedom. Both wanted a comfortable life for themselves and their families. However, their approaches to achieving this dream were vastly different.
I was always the cautious one. I believed in planning and patience.
And I was impulsive, always looking for quick gains.
This difference in personality would shape their journey in the stock market. Vivek believed in educating himself before making any investment. He knew that a strong foundation in knowledge was essential to navigate the complex world of finance. He spent hours in the library, reading books on finance and investing. The library became his second home, a place where he could immerse himself in the wisdom of financial experts. He attended seminars and workshops to learn from experienced investors. These events were invaluable, offering insights and strategies that he could apply to his own investment journey. He understood that knowledge was key to success in the stock market. Every piece of information he gathered was a stepping stone towards making informed decisions.
I started investing early. The earlier you start, the more time your investments have to grow. I chose a systematic investment plan. This approach allowed me to invest consistently, regardless of market conditions. Every month I invested a fixed amount in a diversified portfolio of stocks and mutual funds. Diversification helped spread the risk and maximize potential returns. I was disciplined in my approach. Regularly reviewing my investments and staying updated with market trends became a part of my daily routine. I knew that Rome wasn't built in a day. Patience and persistence were crucial in building a strong investment portfolio. I was in it for the long haul. My focus was on long-term growth, understanding that true wealth is built over time.
Manish, unlike Vivek, was drawn to the excitement of the stock market. The constant ups and downs, the unpredictability, and the potential for huge gains fascinated him. He loved the thrill of a good gamble. The adrenaline rush he felt with every trade was unmatched.
I relied on tips from friends and family. I often invested in speculative stocks, hoping to get rich quickly. It was like a game to me, and I was always on the lookout for the next big tip.
Initially, luck seemed to be on Manish's side. Some of his risky bets paid off. He was ecstatic, feeling like he had found a goldmine. He made some quick profits. This early success fueled his overconfidence. He began to think he had a special knack for picking winners.
Manish, you're doing great. You must have cracked the code to the stock market. Everyone around him started to believe in his newfound talent.
He started taking bigger risks, believing he had indeed cracked the code. The more he won, the bolder he became, convinced that his success was not just luck but skill. However, the market is unpredictable. Manish's luck ran out. The once promising stocks he had invested in began to nosedive without warning. The stocks he had invested in started to plummet, causing widespread panic among investors. His portfolio took a massive hit, wiping out months of gains in a matter of days.
I panicked and sold my investments at a loss. The fear of losing everything clouded my judgment. I lost a significant chunk of my savings, and it felt like my financial future was crumbling.
Vivek, on the other hand, remained calm. He understood that market fluctuations were part of the game. He stayed true to his strategy, reviewing his portfolio but not making any hasty decisions. He rode out the market volatility, trusting in his long-term investment plan.
My investments continued to grow steadily over time. I learned to trust the process and not get swayed by short-term market movements. I had learned that slow and steady wins the race. Patience and consistency were my allies.
In the end, it was Vivek's patience and discipline that paid off. His calm demeanor and strategic approach led to success. He achieved his dream of financial freedom, a goal many aspire to but few attain. Manish learned a hard lesson about the dangers of speculation and the importance of long-term planning. His experience was a wake-up call. The story of Vivek and Manish serves as a reminder. It highlights the stark contrast between impulsive decisions and well-thought-out strategies. Patience, discipline, and informed decisions are key to success in the stock market. These principles are timeless and universally applicable. Remember, investing is a marathon, not a sprint. The journey requires endurance, resilience, and a clear vision for the future.